Hey folks, welcome back to another episode of T2 SMC Trader. So over here, I would love to explain Monday PM session price action. I hope that if you watch this video, you will have an idea about trading. Okay. So let's go to the video. This is my 15-minute chart. You can see this is that bullish fair value gap and this was the bearish fair value gap. Okay. If you take a closer look over here, market is in range bound between these two fair value gap from 15-minute chart. Today is Monday, so that should be the accumulation day. That means market should not expect too much. If it go a little lower, it will go higher. It will go a little higher, it will go lower again. Around this area, when market went higher perfectly, I was in live. I showed you the buy entry around that area. So how market went higher, we have got that move, then market fall. I told that if you would love to look for a buy right now over there, it's gonna be very difficult for me to frame the buy setup. Instead of that, if you'd love to take a sell, that will be more obvious and reasonable. The only reason was the day. Okay, today is Monday, so accumulation should be happen. That's why I told you should wait for a bearish fair value gap. So over there, this is that bearish fair value gap. If you look over here to that bullish fair value gap from 15-minute chart, you will see market didn't work to the upper portion, the lower portion with this fair value gap. Why I took that entry, I will explain that one. And you see, this is just an experimental thing, so don't get panic and don't think that this is a perfect setup or anything. Okay? I will just explain everything. This bullish fair value gap price hold perfectly. The upper portion hold the price perfectly. This bearish fair value gap has broken. That means market has worked with the upper portion. If you would expect that market is going to fall, then you should expect market is not going to the upper portion of that bearish fair value gap. But over here, market has perfectly worked with the upper portion. Even this fair value gap was broken. One time it was broken as well. So far it's looked like fake breakout, but still it was broken. Okay. So let me go to 1-minute chart now. Just keep that in your mind. Those two fair value gap from 15-minute chart. This is that bearish fair value gap. This is the first time when market came into this bearish fair value gap. I was looking for a sell setup from there. There was no market structure shift, so I was unable to take the sell from there. Instead of that, market actually went higher and it reached until that area. This is the time where in 15-minute chart we saw the fake breakout. Okay, this is that time. So when market reached until that area, first my expectation was market was actually spending higher to trade that last fair value gap. So let me mark the last fair value gap from 1-minute chart. There was that last fair value gap. You will see that market actually went through this last fair value gap, made relatively equal highs over there. Then it fall, tapped this last fair value gap one more time. This time market was actually supporting that fair value gap. That fair value gap was supporting the price. Then market fall. Was there any market structure shift? No. But for example, just think there was a market structure shift. Just for example, okay? Just think there was a market structure shift. Are you going to take the sell from there? You can't take the sell from there. Why? Because it is above this bearish fair value gap from 15-minute chart. So even if you'd love to look for a sell, you have to look for that sell from the lower portion of this bearish fair value gap. So far you have seen that market has the intention to go higher. That's why this bearish fair value gap was broken over there. Because it worked with the upper portion of this bearish fair value gap, it even break that bearish fair value gap. Then market went higher a little bit, make a swing low for shifting market structure. That was the valid market structure shift over there. So after shifting the market structure, there is your entry fair value gap, there is your breakaway gap. Now look closely where the entry fair value gap resided. Above this, the upper portion of that bearish fair value gap from 15-minute chart. Is that valid sell setup? No, it's not valid. You can't look for a sell from there as well, because this setup has created above the upper portion of, above the constant crossment of that bearish fair value gap from 15-minute chart. This entry is not valid. Then market went higher, made that perfect relatively equal highs. tick by tick, then fall dramatically. See the fall. You are unable to take that fall. Now you can say that, brother, actually I am able to take that fall. This low has been shifted over here. So that is my market structure shift. I'm going to take my entry from that entry fair value gap, and I'm going to let that last fair value gap or the breakaway gap go. Maybe I'm going to target some kind of liquidity around that area. This entry is not valid. The reason is, if you take a closer look around that area, when market has made this swing low, then market has made lot of swing high, lows, high, lows, high. Then this market structure shift. Is that valid? No, it's not valid. As I told you that I will explain this one. Don't worry, I will explain this one. That's why I put my stop loss over there and I targeted over there. I need to explain this one as well to you. Okay. So when market structure has shifted over there, it has already worked a lot of things around that area. Always I told you to look for some kind of market structure shift that is going to be immediate. For example, here that swing low has been shifted over there. It is kind of immediate. So that market structure shift was valid. The problem was over there. It was situated above the constant crossband of that 15-minute bearish pair. So that's why I was unable to take that sell. Then if you see this is your market structure shift, that means you are working with a huge area. You please don't do that. Algorithm works in the lower time frame perfectly. Most of the time it's sub 1 minute chart, but the algorithm always loves to make the immediate reaction. Okay, make sure that you understand that. Always look for the immediate reaction. If you are in rush, obviously you can take that entry. There is nothing wrong to take a losing trade as a beginner or as a pro trader. Everyone actually took the losing trade. But my question is, why do you want to take the losing trade, which is illogical? Wait for the perfect setup, then take that entry. If it is going to give you the losing trade, nothing wrong about that. Here, that entry, that's why it's not valid as well. But you can say market has traded that entry fair value perfectly, then it expanded lower and it has taken a lot of liquidities, whatever it is. But this setup is also not valid. It was below the 50% of that bearish fair value gap. You can say it was perfect. Everything was perfect except the immediate reaction. Here, there was swing low. You are seeing this low as swing low for shifting market structure. No, brother, this is not a swing low. This is the sideways candle, and this is just a wick which was longer. Okay, that's why this swing low is not valid. This market structure shift is not valid. Then market fall perfectly. Where did it came? Make this low and that low exactly the same low. Look over here. Very clean lows. Here you have very clean highs. Over there you have very clean lows. Okay? That means market is making both buy side liquidity and sell side liquidity. This is the place where my ICT told stay away from the market. Why? Because it's not clear where market exactly is going for. Is that going for that buy side liquidity or is it going for that sell side liquidity? It's not clear over here. That's why you should avoid this type of price action. Though some of you are saying this is a very clean run or something, whatever it is, okay. But to be honest, if you think deep in a deep way, this price action is not a good price action to trade. Then market fall, made that relative equal lows. Then market went higher. Where did it reach? To that specific entry fair value gap. So let me mark this entry fair value gap. Brother, why you are saying this is now your entry fair value gap? Previously you say that this is entry fair value gap, this is the last fair value gap. But now you are saying that this is the this is the entry fair value gap, this is the last fair value gap. Why you are talking about like that? You are talking like that because now I am seeing, I'm not looking for a setup over there. That fair value gap, see this fair value gap, this fair value gap was at very small. It's very small. I don't mark those type of very small fair value gap. I don't mark it until price reach until that area. So in that situation, when I actually look for the setup, I don't mark them as my last fair value gap. Instead of that, I would love to mark the some kind of fair value gap that is more clean. Okay, that was so clean. This also clean. That's why this was my entry fair value gap. This was my last fair value gap or the breakaway gap. In time, you will be able to find out those, trust me brother, but it will take little time. It's called kind of experience. Okay? So market actually reached until that mean constant crossment of that entry fair value gap. Either way, if you don't want to use that one, because market never reached until that area, but I just explained the system over there. Okay, if you think this is the last fair value gap, the same thing. Okay, so you can see that market has reached until that constant crossment, then it is the fake breakout, market fall. When it closed below this fair value gap one more time, now is the part of the time. What time is it? This is the last hour. So market should go in a way. Either it should go for the buy side liquidity or it should go for the sell side liquidity, because it has to close very soon. Now, when market came back again, the lower portion closed below this fair value gap, traded that entry fair value gap or last fair value gap, whatever you call it, the constant encroachment, then fall again perfectly. I was expecting that market is going to reverse from the lower part of that bearish fair value gap. Now I'm going to remove that one and would love to show you this thing. The rejection from the constant encroachment went lower, then it should come, it should fall from the lower part of this last fair value gap. Here, because, to take that entry, what should be my stop loss? Now let me put my stop loss. My stop loss should be above, see this highs above this constant encroachment. This should be my stop loss over there. If I get stopped out, that means market is going for that buy side liquidity. Is that a logical setup? No, it's not a logical setup. I was overzealous and I was trying to catch the time over here. Here, I'm not catching the price action. Here, I'm catching the time. How I'm using the time, this is the part you should understand. This is the last hour. That means market has to close now. That means it has to go either way, either for the sell side liquidity or for that buy side liquidity. I am using this bearish fair value gap right now by analyzing thing that when it reached until that area, it has done its upper job. It left that buy side liquidity over there, but this buy side liquidity is not valid from 15-minute chart. Let me show you from there. If you go to your 15-minute chart, remember the buy side liquidity, it is that buy side liquidity. Now, can you see the buy side liquidity over here? No, it's not clear over there. But if you look at this sell side liquidity from 15-minute chart, can you see it? Is it clean? Absolutely, it is clean. So I'm going to catch the run toward, by using the time now. So let me go to 1-minute chart on time. Right now, market is at the last hour. It should close after taking one liquidity. It should expand toward one side. If I'm not wrong, then this bearish fair value gap should hold the price right now. The distortion, the manipulation, everything has done over there. This is the last hour. I am going to use the time and I'm going to use this fair value gap, constant encroachment rejection, lower rejection. It closed below this fair value gap over there. It closed below this fair value gap. I will take my entry when it will tap to this lower part of this bearish fair value gap. I will take my entry. It was overzealous. It go back again one more time to trade the lower portion. Then it is falling. To understand the part here, if you understand the time, then these entries can be valuable for you. Sometimes you will be able to catch that one. Now, if I talk about the price action, remember from 15-minute chart, market never closed below the bullish fair value gap constant encroachment. But this fair value gap has been violated. That means, depending on the price action, this setup is not valid. Market is showing that this bullish fair value gap is holding the price and this bearish fair value gap has failed to hold the price. But now is the time. That's why ICT told first time, then price. The time is at the end hour. I'm at the end hour. So I don't have the time to take that buy side liquidity, then the sell side liquidity. I don't have the time. That's why I'm going to fall to take that liquidity. Why that liquidity is more obvious comparing with that buy side liquidity. This buy side liquidity is so obvious from 1-minute chart, but from 15-minute chart, higher time frame, this sell side liquidity is more obvious. That's why market is going for that sell side liquidity. This was the reason to push my button over there, and I put my stop loss over here just to make sure that you understand why and where you should put your stop loss. That means the constant encroachment rejection has been done. lower rejection should be done. When both of them happen, market doesn't need to go back until that constant encroachment one more time. That's why I have just covered the constant encroachment by my stop loss. I would love to take a partial over here below this relatively equal lows. My target is that 1 minute last fair value gap. I am expecting that market is reaching for that 1 minute last fair value gap. That's why I put my partial around that area, and I would love to go for that 1 minute last fair value gap. This is the price action from Monday PM session. If you have any doubts, let me just ask me your doubts to the comment box. I will try to give you the reply. Okay, if I know the reply, I will obviously give you the reply. So this is how I actually read the price action from the PM session. And if it can hit my target, perfect. If it doesn't hit it, I will be okay with that. But my belief is market is going to hit my target. That's my belief. Okay, at least this partial should be taken before ending today's PM session. So that's all for today's video, guys. If it is insightful for you, don't forget to give me the thumbs up, and if you are new, don't forget to subscribe to my channel. So until the next video, cheers.